The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. We're back. Whoops. We're back. We're on. This is the Tiger Technicians Hour, the Friday edition, Friday the 27th of June. My pleasure to be here. Dow's down 13, S&P's up 40 cents. Wow. What a market. When the Fed decides to do its work, it does its work about as thoroughly as it can. And the Fed's work seems to be to prop up the market regardless of any indications. There have been many indications that on a purely technical level, without the Fed pumping in dollars to keep the market up, should have had at least an 8 to 12% pullback. Well, let's say at least a 5 to 8% pullback. And we've had very few of those in the past 2 years. And in fact, once again, we are on the cusp of having some digestive moment. But as long as we rotate through different sectors, you will see that the market is able to have high-level consolidations. Those high-level consolidations essentially mean that the price goes up, and then instead of pulling back sharply, it just remains higher, and sometimes even as the technicals start to pull back. And what we're looking at this particular point, let me just run some of the numbers for you. The E-minis are up 50 cents. Now, it looks like nothing's happening, but if you look at the right-hand chart over here, the 120-minute chart, you'll see that there have been some perfect technicals and technical tools that we use that have given all the different indications. The two arch formations that have just formed are very interesting because this last one has formed a higher right side base. Now what I think is happening is we've got another little arch formation that's going to go into maybe Monday sometime, the last day of the month, and then Tuesday, Wednesday, we're going to see what's really happening. Although the week before the July 4th weekend very often is a bullish week. So let's just look at parameters and make it as easy as possible. Let me do this. I'm going to go to INDU. I'm going to go to the Dow. The Dow is right now down 17. DuPont's part of that because it had a weak outlook, weak earnings. It's made a peak D, and I have to put in a down arrow here. Let's just see. A, B, C, and this gets the down arrow right. So here we've got a down arrow because of the MACD and stochastic failing. But it actually is in that down arrow. Usually it implies very often, let me, if you don't mind, I'm just going to put this in 16978. I just want to put that back in there. 16978. Well, what's happened is that the price has gone decisively under the 9-period moving average now for 1, 2, 3, 4 sessions. Of course, today's not closed, but that level is at 16,855. We're at 16,829, down 16 right now. Good action considering. But what I'm looking at, and what's very important, is that inverted pattern that we just looked at, the H, lowercase h, look, this is forming a kind of a W pattern. This is what I showed my subscribers to my opening call, where we have long positions and we have short positions. And for some people, even have an option trade. But this is the pattern I'm looking at. The Dow's been, I don't think you've seen this chart anywhere. I'm not sure anyone's actually put it in to their systems. But I've got an up channel, beautiful up channel. Held support yesterday, but it's not going above the 9-period moving average. This is the Dow. See, the MACD is kind of weak, trying to turn up, and the MACD is flat, I should say, with a very small differential between the 9-period differential line and the slow-moving average. But what's very important is that the stochastic's trying to cross positive. By the end of the day, there's a deflection lower. That'll be a big negative going into Monday. In fact, if the Dow closes above the 16,855 level, the 9-period exponential moving average, to say, hey, you know what? This is an arch formation. We might even try for another test of the 16,900 before next Wednesday. So that's that. And now what I'm looking at on a very short-term basis, you'll see that the VIX 120-minute chart made a peak D. That's where it often pulls back. The market has a bounce, but it's holding the it's holding the uptrend trend line support as the 120-minute Dow chart is showing yet another arch formation. So we've got to be careful of those. And in the dailies of the Dow and the S&P we're going to when I look at the daily chart here. So the daily chart, the 120-minute chart is showing us you've got the soft W formation. The weekly chart happens to concur very well. I'm just going to put that in here because that's the pattern we would be looking at, that there is some support, and then it makes a little turn to the upside. And if that turn to the upside garners strength by getting into the 16,000, over the 16,890 is very strong resistance. That's going to be quite impressive. Now, let's go. So the weekly chart, as of right now, the weekly chart with a high of 16,978.02, we haven't gotten there yet this week. This week the high is 16,969.70. So I'm not sure we have enough strength today to be able to do that. And that is going to make a peak D in the weekly chart. And you see the last time we had a cluster formation at the top before breaking down. This time we're having a different shape, but it turns out to be a kind of a cluster pattern. But it's a pattern that I have to watch very carefully because there could be another oval formation right here. Let me do that so you can see what I'm talking about. There, I'm looking at that and I'm saying, okay, tell me what you're going to do next. And then on Monday, of course, we get the end of the month, and that's going to possibly make a peak E if the entire month of July does not go above 16,978. All right, enough with that. Let's go to the S&P. SPX.X, here we are, made a peak G/C, and it's unusual to make Gs at tops. So there is a chance that we will make a slightly higher 1968.18, 1 penny higher to make a D. But I have to tell you, the MACD and stochastic are weakening, and that's saying that there is a good chance that if the wick of yesterday gets tested even halfway into the 1950 area today or Monday without breaking to new recovery all-time high, I think that we'll be retesting the low of 1944. That's going to be very important. Weekly is still in leg E, right up against the inside track final resistance level, and leg D in the weekly. Now, I was asked if I would do the NDX, NDX.X. The NDX.X is the NASDAQ 100, and it trades with the QQQ series, and this is at a peak D in the NDX with the slightly weakening MACD, with the stochastic still at 83%, and that is actually quite good. Weekly, I'm going to call it leg E/B, and the monthly is going into leg F. And if it's not an F, but it's recycled, that's going to be something else completely. It'd be F/B. So we're going to be watching this very closely all the way for the next couple of weeks. And the QQQ series, trust series, same thing as the NDX. Now let me say that the gold GCQ14, this is very interesting. High-level consolidation of the 200-period exponential moving average after making a peak D. And that's the first time since it broke down on the 21st of March under the 200-period moving average that it's this cluster formation. Let me show you something very interesting. See, there's another oval pattern. And this is going to give us a lot of information because a close underneath the lows, the recent lows of 1305, 1306, going to 1304, certainly under 1300, and then gold will take a breather. But at 92%, the stochastic saying, no, don't get excited. Gold is holding really well. In fact, when I say really well, I mean it's been in a sideways, a rectangle formation. Remember, my expression is rectangle formations can last a lot longer than your patience, and until it decisively breaks above 1326.80. I'm going to call it 1330. A break above 1330 would be really positive. If maybe Sunday night we get some bad news, Ukraine or whatever, oil, whatever it is, maybe gold starts to go even higher. But a break underneath 1300 says, 1293 is a 200-period moving average. You could be revisiting. Thus far, gold is acting very well. Silver at this particular point, let's just go to the continuous contract. Silver is trading down 0.02, also in this very same pattern, very long-term on on the 120-minute chart, that is. Yeah, and it's called an intermediate term. Sideways pattern with a trading range, and silver needs to break into the 2140s. It's at 2140 now to really decisively go higher, and a close under 20.60, and this is the continuous contract, and the 2023 level at the 200-period moving average will be hit. I want to go to bonds because this is going to be the most fascinating thing. I've got a peak E in the TLT, the Lehman 20-year T-bond fund, and then it went to a possible F/B. I would normally just say F, but because of market conditions, I have to put into the factor here that there's a good chance that this cup formation that we're looking at in the move this away in the cup formation, the second cup formation. This one was 1. This one is 2, and together they make 1 as well. So let's just do this to show you what the patterns I love to look at right here. So when you're looking at these particular patterns, look what's happened. This has made a much larger cup formation, not even a bowl. It's really like a double cup. Actually looks like a heart with the 2 parts, left side and the right side. And that says there's a really good chance that the TLT is going to retest 114.84. So let's put that into the context of the daily. The daily is still only in leg A up in a retracement failure mode, but it has gone to the next, to the inside track. What was the propellant line now has become a repellent line. I'm going to be watching this closely on the daily because if the TLT pulls back under 112.50, and right now it's 113.51, that's going to be a big pullback. That's going to be a negative and say, hey, sideways action, we might have to retest the 111s. In my opening call, we added to our short positions today. And one of the reasons is very selectively because we have longs and we have shorts. And in this particular context, what I'm looking at, and I think this is very important, is that we're getting some evidence that there's a slight change here, that bonds, money seems to be going back into bonds. Remember, we looked at the BND yesterday. That was the bond fund. Look, there it is, leg C, done very nicely. It did not make a low like the TLT did to test the left side low of the 10th. So that's why the TLT is only in leg A now. But in fact, this is in leg C. Stochastics at 81%. MACD is improving. So the bond fund, the Vanguard Total Bond Market ETF, is actually doing quite nicely. Now, I want you to do one other thing. I hope I hit the right keys. GLW is a GWL. Corning is GLW, so this is GWL. Remember, I don't know if I showed this here, but I showed it to subscribers. And I said that this Friday is going to be really important because it's going to tell me whether it's a peak D of significance in the weekly chart of the S&P World Index, excluding the United States. And look, that has gone to an E in the monthly, a D, almost certainly a peak D in the weekly, and a gap down G in the daily. I'll talk a little bit more about this when I get back. Basil Chapman, Tiger's Predictions Hour. I'd love to hear from you. Just done.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we are back, and the Dow's down 24. S&P's down 40%. I had a question about natural gas. Natural gas, I had mentioned the other day that I thought natural gas was going to be coming down and testing the 200-period exponential moving average. This is the August contract, NGQ 14. It made a perfect peak E-top. Let me do this so that you can see. For those of you who don't know about the Chapman wave methodology, I look for the lowest, most obvious low bar. This is the core to the concept, and I'm here to count each successively higher peak. If there's a buy mode in place, the buy mode should take you to at least a peak D. Now, look at this. We've got A, B. I'm using the trade station a little differently here. They're working on, there's a technique that is absolutely fantastic that they had before, but it's not allowing me to save. This is the latest beta version that they're working on. So I'm hoping that that's going to be repaired, because it was just great. I'll show it to you in a moment here, just how beautiful it is. Look at this. I go like this. I put the up arrow in, and then I go to, in this case, I press that little thing there, and then I go to text, and watch how I do this. It looks like it's automatic. It goes A, B, C, D, E, F. Unfortunately, that will not remain, even if I save it. For some reason, I don't know what it is right now, The other ones will, because I did them each one separately. Isn't that great? It looks like it's in automation. Okay, so we've got the peak F at 1 point back on the 23rd. Oops, let me get rid of that arrow. Juggling a lot of things here. Remove. Okay, right there on the 24th of February, it goes to 4.891 on the NQ. There's the August contract. Plummets down to a trough A, B, C, D. And a D starts a brand new move to the upside a month later, 2nd of April. And it goes A, B, C, D, E. Remember, the object is to get you at least D, then other techniques can take you further. It goes to an E, a great turnaround candle right there with the MACD and stochastic failing. And then it comes down from the high of the 30th, almost a month later. Each one's in monthly increments. It goes to 4.870, and then it plummets down in a single A, and then down to B, trough B. So when you go down to that kind of speed, the bounce is actually often very, very quick. So look at this. It goes peak. You can't count the bar that made the low because you haven't yet established that it's so low. So that cannot be A. Let me show you this. This is a little technique. This is Technical Friday. So I'm going to take a moment. The bar or the low bar of the 15th of May cannot be leg A to the upside. If it's an instant restart, you can talk about it, but not, that's at D. But you can't talk about it at the low. So you have to wait for the next bar that makes a higher low bar, and it came right off the 200-period moving average to establish that that was a trough. Now you can start the count, and that goes A, B, C, D, and then it pulls back under the 9 EMA, but the MACD does not break down, even though stochastic does, and then pop, it goes to where? On the 16th of June, it makes a very long-legged candle with a silent doji before and afterwards. And that says, be real careful. And now it's turned the 9-period exponential moving average into strong resistance. I'm suggesting that the 200-period moving average right here, I don't think it's going to hold just yet, and not until it tests 4.296, and it's at 4.381. So 4.296, and I suspect 4.300 is that whole area is going to be the testing area. So we'll wait and see. That could happen quite quickly. And that's the daily. Monthly chart is a little different. We've got callers online, so let me just go to my monthly chart. Made this big spike to a leg E, and then a peak E back in the week of the 28th of Feb. And now it's pulling back. Remember, I drew this pattern in a little while back. I said, be careful. We know this pattern. For those of you who have been following my work for a long time, you know how often these patterns repeat. And it says, be careful, because the H that goes to a lowercase m pattern could retest the lows, and that concurs with everything I've been discussing. And that takes you to the 4.26 low. It's even lower than 4.3. Yeah, the 4.26 low of April of this year. Okay, so that's that. So going lower, that's the way I see it. Well, let me just see. Okay, so there's a question. Yeah, we got a call. Oh, we got Jerry in the back. Hey, Jerry, how are you?
Talked a couple days ago. Just a quick update on Google. Remember we talked about that, so just a short one. And I also had you a question about seasonality type things. I saw a guy on TV today, Art Cashin. He said that...
Wait, I don't want you to be cut off by the break. We've got a break coming up. We've got Jerry online. We'll be right back.
Oh.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 28. S&P's down 75 cents. Gee, what a hanging-in market this is. A couple of things that I just wanted to mention. We're on with Jerry in the Back Bay. He had called in a day or two ago, and we were looking at Google, which Jerry was long, and we discussed certain parameters that if it broke out of, and I also mentioned that there was a pattern in the daily chart that I call it the falling axe formation. Oh, during the break, I should have got my CD out so I could show to those of you who are not used to these patterns. Basically, it looks like a long arm that goes up, the price moves up sharply, and then it makes a series of lower lows and lower highs, and if it breaks that, it can make a one-to-one extension to the upside. This is a kind of a unique way of looking at it, and I usually use diagonals, so I'll just show you here. Let me change the color of this so you can see it, and then we get Jerry back online because he has some other information. I just wanted to show one of the techniques there, the breakout, and that's taking us just a little bit above the extension. Now, Jerry, hi. Let's continue the conversation. Jerry there? Oops. Jerry, you weren't supposed to be cut off. I only cut you off because of the break. Let me see now. My
Yep. I just got back on.
Yes. Okay, so let's continue the conversation. Google is trading at 577.55, up $1.55, making a potential peak D here with stochastic at 89% in the daily, and the MACD is still very good, and the weekly is improving, but the technicals are still lagging, and the monthly MACD technicals still show enough strength for a little bit more of an up move if this peak D is surpassed by 1 penny above 582.45. Fire away.
All right. Yeah. Thank you. I heard on TV this morning a guy talking, Art Cash, and he said that 22 out of 25 times that we had triple witching in June or quadruple witching, the market went down the next week, which is this week. But then he said that the next week, the first week of July, that because of the 4th of July, it's up, an extreme amount of time. Do you give much credibility to that type thing?
I've listened to him for what's his name again?
Cashin, Art Cashin.
Yeah, Art Cashin. I've listened to Art Cashin for 20 years, 30, I don't know how long, for years and years and years. I have a great respect for his knowledge, but I also have to tell you that a lot of the time, what he does is he sets up parameters and says, if such and such happens, and such should happen, and therefore it's not that he's hedging, he's just giving you parameters because sometimes he's not sure, and he can be wrong for quite a while. Sometimes he's absolutely flummoxed because us old-timers, when we look at markets, we've got the baggage of the 1987 crash, the 1990, the 1992, the 1990. You know what I'm saying? And young people can come in and say, "What crash? What are you talking about?" Especially like young people who are buying houses and all that. They're going to say, "Hey, this is a fantastic bargain," and maybe they're absolutely right, and that prices will never go down again. So the history is something that always looks good in hindsight because that's what history is. We are trying to project out. So when we were looking at, say, first of all, as to the function of the market in historical terms and repetitively, I would have to say that my impression from what I'm looking at now says that the market is beginning. Whereas before, every single bit of positive news took the market to all-time highs very quickly, look at the struggle it's had lately. And that says to me that
it's so stretched above some of its moving averages. It's like extraordinary.
Yeah, so that means if you're going to be looking at the market as it stands right now, you've got to say to yourself, gee, in all practical terms, we seem to be churning, or this is just a whopping move that has the last 4 to 6 weeks in a
So you have to overlay that on top of those phenomenon that he's talking about.
Correct.
So
that's exactly what I'm saying. So maybe this is by a week or whatever it is, but the fact is that I tend to find that those are just fascinating. But if you use it, you could. I had a cartoon that I drew years ago. I didn't put it into my CD book, and it had this guy's looking at the newspaper, and his wife's watching him, and he says, the market was 10 to 1 on the upside. Let's see, up. My stock is down. And his wife says, that's how they get the 10 to 1 ratio. So
that's pretty funny.
But you know what I'm saying? That the statistic works only as long as it works. So
right.
I'm looking at.
Thank you. I don't want to take too much of your time.
All right, I want you to hear what you said about Google.
Yeah, no, I got your because we talked a lot last time, so I was just wanting an update, and you gave it to me, so.
Okay, so and let me just do this real quickly because I think Google is one of those stocks that's very important to be watching here. I'm just going to do this. I'm going to do a real quick. I'll have to do. Am I going to do this the old way or the new way? 54.70, 54.50. So this is A, B, C, D. Yeah, this is a peak E for Google. And if you look at the channel formations, if you look at the W formation in the 120-minute chart that is just broken out of, this is a little consolidation, and I'll make it real easy. As I said before, a strong move above the high of 582.45 says Google can go a little higher. I'm only saying a little higher for now, even though the weekly chart is starting to improve. Most importantly, if Google takes out 570, that's only 7 points down, but at a $577 stock, that's 1.25%. So I'm saying if Google breaks... Yeah, so if Google breaks 570, be prepared for some digestive action that could take it maybe to the 566 9-period moving average. But I must tell you that Google is going to be a really important stock in July. And the reason why I say that is because it made a peak E top in the monthly chart back on at 614.44 in February. But the next month, 113.49, less than $1 lower, was the high, and that's what I call a two-bar reversal. That reversal was very sharp with the momentum stocks back in that April period coming down sharply. The sharpest move to the downside that they've had in a very long time on a percentage basis. In points, it's the biggest move any of them have had ever, actually, in certain cases. And then what happens is it goes to the 502 level. So the rally that we're looking at now, if at any point in July, instead of climbing to 600 to start trying to test the high of 614, Google, by the second to third week of July, is starting to fail and takes out 558. We have to be 555. We have to be very, very careful because that monthly chart has the pattern that I talk about very often, the lowercase h, especially in a monthly chart, and the MACD has got some strength left, but not enough yet to tell me that it can make an all-time high, and the stochastic is acting quite poorly. So I just wanted to add that.
Thank you very much.
Thank you so much for calling, Jerry. Always good to hear from you, and congratulations on your Google trade.
Nice. So have a nice weekend. Beautiful weather. Take care.
I was going to say, we've got a great weekend here, yes. So, folks, let's do this. So that's Google. Let me just add, I'll put the 120-minute chart here. This is something I want you to do in any case. So Jerry was the inspiration. Let's look at Amazon, another great stock, having a pretty big digestive phase from the 408.06 all-time high that was made with the 339 round number opening in a monthly chart. That is really unusual, and a silent doji to boot. So now what I'm looking at is that Amazon, it seems to me, is in a very big digestive phase, and that Amazon at 324.04 down $1.64 is struggling at the 200-period moving average, which it should have cleared as if it was nothing. It should, in fact, have been at this particular point, should have been at about 346 instead of 324. It says to me, Amazon is in a corrective phase at very best, because in this move that it had off the bottom of 284, which is a fabulous move, 284 to the 340 level, 60 points, 60 points is, no, is that 160 points? 160 points. Go on. 160 points. 160 points is a phenomenal move off the low, but now it's digesting that gain. And I suspect from the action I'm looking at that if Amazon by the second week or so of July, mid-July, if it hasn't cleared it's at 324. If it hasn't cleared 339, by that time, there's a good chance that instead it's going to go into that very, very strong candle of the 5th of June, where the low was 323, the low was 306, and the high was 327. That's going to be the candle that gets filled. So I'm watching this very closely. Let's take another one. Priceline. I haven't updated Priceline for a while. Let's see what it's doing. Priceline. Priceline made a peak B in the daily after making an all-time high of 1378.96 back in the week of March the 7th. And peak D in the weekly, pulls back to 1087. That's a pretty big pullback, 300 points. Rallies very strongly, just over 50% to a peak A, which might become an A minus very soon at 1292. Here again, digestive phase. I have to tell you that I'm looking at these momentum stocks, and I'm saying to myself, fabulous retracement to the upside, But what is going to happen in July? That, to me, is the very big question. And the weight of evidence right now is saying that many of these stocks are going to have a real tough time if they don't use next week as a springboard for a breakout to the upside. Not all-time highs, I mean a breakout over any of the recent highs that were made. The VIX, I needed to look at, not a question, the dense statement, the den, I'm going to follow up on that. The VIX is trading at 11.67. It has not gone back to the low of 10.34 of the other day. And that says to me, it's just the start of some kind of building of strength in the volatility index. Let me explain what building of strength means. Basically, it means that this trough D that was just made, right there, is starting to show signs of buying in the volatility index. Now it's not volume, it just means buying in the volatility index. When the volatility starts to climb and remain, not like it has on the downside, always closing under the 9 EMA, when it starts to break that 9 EMA and closes over 13.72, it's at 11.67. Boy, that's 2 points. That's like quite a few hundred points on the downside, on the down, quite a few dozen points on the S&P before it can even think of that. But if it does get into the 1378, 14 area and starts to make higher highs and higher lows, that's going to be important. But remember, I've been talking about this for a long time. Two things are imperative for a bear phase to, how can I put it, sustain. To sustain that kind of a move, you've got to have a trend change that's signaled in the daily and then the weekly. And what do you need? The two things, VIX rising and bad news. The technicals very often turn before the news takes place, but immediately you get any kind of confirmation, you've got to have bad news. And it doesn't have to be bad economic news. It's just bad. No, let me put it this way. It's bad news. Why? Because it's news that affects the stock market negatively. Just let's make it as simple as possible. What is bad news? It's when the market responds to any news negatively. That's bad news. And we haven't quite seen that yet. We are seeing signs, seeing little symptoms, but we don't see the actual growth of that concept. So that's what we're looking at. Now, the monthly chart on the VIX, for the very first time, there is a chance that for the very first time on the monthly chart since back in since way back the week of, in November of 2006, the volatility index had it was almost the low. It wasn't quite the low. It was a bar before the low. But it had the tiniest little doji at a low that turned out to be a turning point. Well, this is the tiniest candle we've had that's looking like a doji. We'll see what happens. I'm not going to presuppose anything. It's a monthly chart. We've got to wait 2 months before we even get a clue. So I'm just going to say daily chart needs to get above the 1270s into 13s for the market to start moving down. The weekly chart has had a higher low, so this is a trough. This, in fact, is an A, B, C. Now I have to continue. I'm not going to do it. It takes too much time right now. But this is a potential trough that could have a potential for turning to the upside, and that upside will be exacerbated if, in fact, the high of last week of 1289 is taken out. So that's going to be important, and that's enough with the VIX. I wanted to talk a little bit about something that I was a little surprised at this morning, only because I hadn't looked at it yesterday, but not surprised in what we've been talking about, and that is copper. Copper is so close to making a leg T. I'll be right back after these messages.
take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Let's see, just a couple of quick questions here. Let's see, I had one question about copper. Yeah, so the copper, what I was looking at is, I'll go back to it. I just want you to not forget, I had a question about the IBB. That's the iShares NASDAQ Biotech ETF, trading at 254.71 down $1.67. That 120-minute chart made what I call a rogue wave, spike to the upside, which immediately pulled back down below the previous high. And that says be careful here because it is consolidating. Whether or not it's got a sell, it hasn't yet got a sell signal in the daily. It's real close to it. But, you know, being wrong with the IBB can cost you a lot. We are short from the very top. and held that short position. I wanted to experiment. Maybe it's not a good experiment, even though we started to trade on the long side via a different vehicle periodically. I'm still holding the core short position with subscribers here at from way in the 271 area, and it's at 254.5 because I think it's coming back down, and it's going to be a deeper move to the downside. That's the way I've got it right now. We'll see what happens. So we've got to stop in so that we'll still make money, but it won't be quite the huge gain that we had earlier on. But that's okay. Meantime, back to the range. So the IBB, I've got a G/C in the daily. Looks very much like it is making some kind of a top here, and a B in the weekly with a very strong move up, but the stochastic still only at 71%. So if the IBB breaks 251, it's coming back down to the 240s, and that's going to be the big test. And if it moves higher above the 260 area, that is fantastic action. It's going to go maybe retest the old highs. I don't know. So let's sum it up here because you've got Nico and Paige coming on, living a primal lifestyle. I want to just show you that the Dow has remained under the 9-period exponential moving average for now. And I don't know, it seems to me that next week, in fact, could be a weak week if by the 1st of July, the first trading day, the Tuesday, if we've already remained low and we start off the week with the next week chart with the Dow below 16,750, let's say, quite quickly, that's just going to say to me, uh-oh, now we're going to retest the lows. And the most important thing would be if the Dow gets anywhere into the, let's call it 16,780s, then there's a real good chance that it's going to retest the low that was made yesterday of 16,746. If it does that, then you've got to be looking at the low of 16,703 as being tested next week. I will be wrong, and there'll be a retest towards the highs if by Monday or Tuesday, anytime, the Dow is up at this 16,890s, very important resistance area. And the other thing is the VIX. If the VIX continues to remain low, that's just saying buying pressure. And if the VIX just suddenly, out of the blue, takes out yesterday's high of 1248, was it? 1251, that's going to say to us, okay, now we can start to see more selling pressure, but not until the VIX is in the 13s and 14s and holding will we see a sustained move. Now, when I talk about a rotational aspect, the rotational aspect is right now saying you've got a LinkedIn, LNKD, that in fact is acting quite nicely. Oh, I did it the other way. I didn't save it. So there's DE, and this is an F. If LinkedIn breaks above 172, it's trading 167.43 right now, LNKD, that's going to say, hey, watch these momentum stocks. They haven't quite finished their bounce to the upside. But if LinkedIn takes out the candle of the 20th of June, that's 162.86. LinkedIn closes under 162. That means the consolidation has begun. And that's going to be very important. So I've got the aspect that I'm trying to look for now is the bias I have tells me the rotation's continuing very selectively. It isn't like all the indexes you can just go in short. They are mixed right now until they are all in one position, either going down or going up. That the trend is going to be a little sideways for another couple of days. Hey, folks, stay tuned for Nico and Paige. Have a wonderful weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.